Right, hi guys, welcome to the Trading Titans podcast. Today we are going to be looking at stocks and value. Now, you're going to learn how to capitalize on the best prices so you can get a pretty decent return, and that is the whole point of today's session. Right, we're going to focus specifically on stocks and equities, and I'll tell you why. Is because, of course, as you can see, most of the podcast is considered a Forex, and we haven't actually even done a lot on commodities. We are a multi-asset place, right? So it is not just about Forex. So I do want to expand a little bit more for guys who are learning about equities or trying to learn about stocks, right? I know there are a lot of you, right? And whilst Forex is very exciting on the short term and can offer tremendous gains on the long term, but stock market still has a lot more volatility. Right, so it is a lot more of an awesome place to play, and there are over 5,000 stocks. So it is amazing, right? You can do quite well. I have a very decent stock portfolio, and as I continue to play in FX, I continue to play in the stock market, and I continue to play in any other place where assets generate value. So for guys who are looking to take this a little bit seriously and actually do well from it and make some cash, then it is nice to have a more holistic and rounded view of markets and not be zoned into just Forex, right? I know the brokers are selling this, right? They're really selling Forex, and more so than they sell stocks, because we all know that stocks is all about wealth creation, right? So it's a little bit different from the gung-ho trading that a lot of people want to bring into Forex, right? And why it doesn't work for a lot of people. And they haven't yet figured out how to keep things under wraps, and they haven't yet figured out how to balance in Forex markets. They're still kind of shaking everywhere. It's like when you first learn to go up on one leg, right? So I think it's a lot of that at the moment, and I kind of also want to bring the other element to markets, okay? And I'm like as true as they come in terms of I'm a straight arrow, right? And I don't mince my words. I kind of call it as it is, and guys who've worked with me, they know that, right? So the reality is I'm looking in this podcast to actually bring to you a lot about stocks and how we can kind of attack it, and using stocks as an example, because there is a lot of opportunity in the stock market, and we are also marrying that, of course, with market profile and time price opportunity, so you can actually see how it could work for you. So enjoy the podcast, and any questions, guys, just don't hesitate to let me know. Alright, today I'm going to be taking a closer look at equities and stocks, and also how we generally handle value perception, and how we treat assets when they sort of shift or when their values move. And it's all really rooted in a very simple concept, which is that markets are consolidating or they are expanding over time. So they're either consolidating within a range or they're expanding in some kind of trend. And let's go back to basics. So when we first started to look at markets, I find that people never really started with basics. What they started with was really weird concepts like pattern observation. Or, no, when I say weird, like, I don't mean weird in a bad way. I don't mean like weird as in untrue. I mean like weird as in it's not the right place to start. So I think when you gain more experience, like anything, you become a bit more flexible. You start to adapt more to different ideas, and you start to be a bit more of a creator. So you incorporate a lot more things than you probably otherwise wouldn't have when you started something newly, and this is true for everybody. So I think more than anything else, we shouldn't have started with this kind of way of looking at markets. So there's a huge gravitation to geometry, which is very evident in the algorithmic markets and people who are looking for trading robots, etc. And there's a huge leaning towards other mathematical approaches. And there's also a huge leaning towards a lot of visual pattern recognition approaches, right? And that's fair because it's the sort of, it's the idea of the day. It's what everyone is doing, so that's what everyone wants to be doing, or it feels cool, or there's something more intelligent about it. So in my experience, simplicity works best. Okay, so the simplest of ideas and the simplest of strategies and the simplest ways of looking at the market of what have worked for me, right? Complexity hasn't really ever worked for me. I can combine a few very simple ideas into one seemingly simple idea, but I cannot do complexity, right? So all that algorithmic stuff, that was never going to be for me. So let's break this down. Now, when the market is consolidating, we are generally going through a phase where there's an agreement between buyers and sellers. So there's in a way, the markets are fair and there's a lot of trade happening. But through this fair process, there's a lot of the asset being accumulated at a specific low price or being distributed at a specific high price. So that's exactly what's going on. And when we move out of this agreement phase, it means that at one point in time, either the buyers have failed to agree with sellers, or the sellers have failed to agree with buyers. So at one point in time, the market will now move away from that area of agreement and start looking for a new area of agreement. And that's all that's happening, basically. It's really that simple. So without, trying to create all the other seemingly complex ideas, we can just rely on this simplicity, right? So when we look at TPO charts or market profile, especially when we deal with equities, something that is limited in supply, there's a lot more liquidity, I believe, in currencies, and in many ways currency just keeps getting recreated and recreated. So we can't exactly say this thing is limited in supply. So again, it's just moments in time when demand overcomes supply or supply overcomes demand and we get some movement, but there's always that sense that there's an abundance in currency, whilst in the stock market it's really truly limited, because there's only a set amount of shares on the market, right? So once that volume has been taken up largely by one party, then that's a situation where demand has now exceeded supply. And the only way that market corrects, and we've seen this more recently with the stock market, is if that party sells out their stake, right? So equities are supposedly one of the greatest markets to try and understand, even if you're going to get a grip over currency at some point in the future. But I think equities is a true reflection of a market, right? So, or stocks, as some people say, is a true reflection of the market. And in many ways, understanding this gives you a little bit of an edge. So if I were to just very briefly now iron out a typical range or a typical accumulation point, I could simply do this, right? And I could simply do that, and what I have is an area where the market is relatively balanced. Now, a lot of traders, it goes terribly wrong, right, when they try and attack the market at these highs, right, and they want to buy on the exit of this area. Now, that's great, but the only problem you've got is if you're buying at this area, whilst it feels very attractive and it feels very confirming that it's the greatest place to attack from, at the same time it isn't. No matter what time frame, for those guys who are much more familiar with market profile and time price opportunity, who've been doing this for a long time and who've worked with me for a long time as well, will tell you that it's a very poor place. Everyone would unanimously say, if I asked my group and I said, hey guys, is this a great area to buy from? Everyone will say no. Everyone unanimously say no. And, they're saying no because they would have liked to have a better price. And that's one of the advantages that you get when you do things from a professional point of view and you think about what you're going to do and you work with people who are conscious of what they're doing and are not just largely focused on, pattern recognition, right? So when we break out of this, it's a bad place to be long, even though the market is likely going to rise, right? It's not a great place to be long. And I'll explain this in a little bit more depth in another video, the best way to attack these kind of trades. Even if you want to buy here and you want to look long, it's not the greatest place, but there are times when this is the only opportunity you've got to get into this market, and you don't want to second guess it, right? But whenever we develop value in a concentrated area like we've done now, one of the crucial things we want to do, right, and this is most important, is that we want to be able to find a buying place within this area. And there's not always the signs for that to happen. You can't always see a reasonable reason to want to buy within that area. And on another video, I'm going to talk a lot about how the demand picture or the volume picture relates more or less to where you get involved in the market. But I'm not going to do that today. That would take too much time, right? And I actually intend this video to be quite short, and it is not looking quite short right now. So there you have it. All right. So if I was going to buy here, right, which is about $41.92 a share, would have been probably the earliest point I would have been alerted to the fact that change was occurring in this market, right? And obviously we have this gap up in C period start, which is what eventually drove the market. So I will be entering here and looking for higher prices, and most likely that will be value high going back a couple of weeks now. And this is actually a weekly profile, by the way, right? So I would be looking for the highs, right? And that allows me actually quite a good risk reward type profile, because now I'm able to get into the market at a pretty advantageous position. Now, I've done that for several reasons. One, it's because it was an initial balance break. Two, I'm aware I'm in a consolidating framework, and I'm seeing a lot of strength within that consolidating framework in favor of buyers. And since the market has been prior shifting value much lower and then consolidating and now failing to continue to shift value lower, which would be reflected in terms of a trade below this consolidation, then it makes sense that I want to be long reasonably quickly. Now, it doesn't matter if the situation develops where the market breaks down and does what we call a shakeout and then returns. That is okay. But this was my best opportunity to get involved in this market. Now, there was no evidence for me to buy the market at $40.95 a share when the market closed heavily down that week. There was also no advantage for me to buy the share at the slightly higher price of $42.32, because I can't actually see this market reasonably balancing at this stage, even though I have an initiating buyer right here, which looks quite good. But that was also evidence, I guess, that in future, if I could get these kind of prices, then there's an advantage there. But I think it became clearer at the end of this week with the absolutely lower close and the overlap in values that the market was reasonably balanced, right? So now I have a bracket or a parameter to start exploring the concept of where to next. Right, so hopefully this has proved a bit useful in terms of we would work like this whether we're dealing with currencies or commodities. As long as we're using market profile, we will adopt this approach for our longer term investment strategies. So anywhere from swing trading to long-term trading. Of course, if you are working within a daily framework, these balances could be quite extended and you would need more observation. But again, in another video, we'll look to discuss those things. Well, awesome stuff, guys. I hope you enjoyed this edition of Trading Titans. And if you've got any questions, don't hesitate to get in touch. Again, check out some of the programs we offer. Our transformation program is particularly awesome. You get to work with me one-to-one. So I think it's awesome. Clients think it's awesome. So hopefully you find it awesome too. But any questions, guys, don't hesitate to drop me an email. And have a great Easter.